Stock Market Disaster or Opportunity by Gary Silverman. As I write this, the Vanguard 500 Index Fund is down close to 14% this year, as is the Vanguard Total World Stock Index Fund, a broader measure of the global equity markets. Since all of you follow my advice, yes, I'm being sarcastic, you certainly don't put all of your money into the stock market. So, how did a mix of stocks and bonds do? Looking at the T. Rowe Price Balance Fund, things are indeed better. It's only down 12.5%. That's because the bond markets are down also. And while they are down less than stocks, given that most people think of them as safe and use them in their portfolio as such, this may have been a startling event. On the heels of this rather dismal year, I received emails from two clients. One asked what we were doing to keep from losing any more money, and the other if we agreed with him that it was a good time to put more money into the markets. Two people with opposite thoughts looking at the same data. Making the assumption that in the week between writing this and you reading it, the markets still look miserable, the question remains what you should do. We've talked about this a bit this year already, but I find as the markets get lower and people see real dollars disappearing from their portfolios, the discussion becomes more meaningful to more people. There are two main facts that need to be front and center in our discussion. First, the stock and bond markets have recovered their losses every single time they have gone down for as far back as you look. Second, in the 2007 to 2009 bear market, known as the financial crisis, most stock indices lost over half of their value. Now, knowing that stock markets always recover is of little concern when you're about to retire and see that your nest egg has dropped 25, 35, 50, or even more percent. But surely you're not saying that losses like we saw during the financial crisis could happen again now, are you? Yes, that's exactly what I'm saying. The emphasis, though, should be on the word could. I do not know that we will have a repeat. I am not predicting that we will have a repeat, but I am making sure that the portfolios I manage can survive a repeat. So then you're going to cash now. Nope. Because in addition to making sure that a portfolio can survive another financial crisis, I need to be able to also survive if it doesn't happen. Most of the folks we help are not the kind who can live happily on 1/100% of a return they get on cash. They need to have their portfolios grow. This tension between being safe and investing for growth is always there. It's just a bit more obvious now. We'll talk more next week. Until then, take care, and may Ukraine stay free.